Hey everyone, me Kevin here. Well, I feel pretty miserable, but don't worry. I'm at least here for the CPI data release because honestly, it's been keeping me up because I worry it's just going to be a miss. Bloomberg thinks that we're going to be coming in at slightly higher than consensus. Consensus is 5.4% year over year. Bloomberg thinks we're going to come in at 5.5%. They think that's going to be a slightly slower rate and a slight inflection point to the downside with inflation. That is, we've seen inflation kind of go up like a parabola. And now we're going to kind of start seeing a little bit of that curve. I'm expecting that curve in September, October, right? October, November for the release dates. We're going to see what happens now. Looking for a month-over-month reading of 0.5%. Last month, it was 0.9%. Let's see what happens. Keep in mind, you can get a free stock with Public by going to metkevin.com/public. Public in the link down below. Sorry. Man. Oh, geez. I don't know why that's going off. But anyway, it's because, well, I don't know why it would go off right at this time. But anyway, here we go. Let's see what happens. We're looking at this bottom right corner here. Then we're going to go ahead and pull it up and we'll go through it. We're still not out. It's going to be a big moment. Oh, man. Sorry. Oh, man. I don't even know if sleep at this point's going to help me anymore. All right, here we go. Codeine goes like right through me. Okay, remember, this number here is the month-over-month number. The consensus is like 0.5. Let's see what it comes in at. Obviously, the bigger the number. 0.5! Oh, wow, month-over-month actually met. That's crazy. Okay, and 5.4%, we actually hit. We hit it exactly. Wow, that's crazy. Bloomberg was wrong, and instead Wall Street consensus was correct. That's crazy. Give me one sec. Sorry, this is earnings for end phase there that I was reading. Let me transfer this over here. Here we go. Now we can actually write on this. That's incredible. I'm actually surprised. I was expecting this to beat. That's not bad. That's a good sign. So here's that 0.5%, 5.4% over 12 months. Let's see how things changed. Yikes. Okay. Gasoline index increased 2.4%. All right, I really want to look at what ran crazy here. Let's see. All items in the index ran 5.4 over 12 months. Same period, the index minus food and energy rose 4.3% over 12 months. It's actually not as horrible as expected. That's not bad. I mean, obviously, it is still a very high number, but this is good. I was worried that we were going to get this insane like blowout, and the Fed was going to freak out even more. So this is good. All right, let's go ahead and see some of the categories, some of the things that went up here. So we've got index for new vehicles. Look at that. New vehicles rose 1.7% in July and has now increased 5.4% over the last 3 months. Used cars. Whoa, look at that. Used cars only went up 0.2%. See, this is what I always talk about when I talk about inflation. It's like, yeah, prices, they can go up a lot, but doesn't mean they're going to sustain that going up over and over again. So used cars only went up 0.2%. Started seeing that inflection point basically in used car prices. That's incredible. That's a big shift. Okay, let's go back and get the chart. The chart's going to be fun. So at the bottom, you can get the chart here. All items. Here we go. Okay, so what do we got? So what we're really looking for are, hold on, by expenditures. Here we go. We're looking for big numbers on the far right column. So we've got meat and poultry went up 1.5%, fuel and oil 2.3%, 2.4% for gas, motor oil. Okay, I want the details. Detailed expenditures. There we go. Let's see, where did our inflation come from? And I want to look at rents too. That's going to be a big one. We had, here we go, crackers, bread, and cracker products went up 3.7%. Okay. 4.8% on frankfurters. Oh, yeah. Got to get those meats. Citrus fruits went down 5.4%, including oranges down 6.8%. It's interesting. I'm really looking more past food, though, mostly because there are fluctuations in food regularly. I'm looking for like rent and air travel. Let's get some of these. Let's just type them in. Let's type in rent. Rent of shelter, only 0.4%. Rent of primary residence, 0.2%. Excuse me. Lodging away from home still went up 6%. That's a big number. So like hotels and things like that. But rents did not bump that much. Rent of primary residence at 0.2%. Excuse me. That's annualized 2.4%. So that's not bad. That's not bad at all. Let's go to airline. Airfare. No, air. Let's just try air. Here we go. Airfares down. Look at that. Airfares went down 0.1%. See, it doesn't always go up. Hold on. Sorry. Okay. Anyway, this is way better than expected. I'm impressed. We finally have a rotation here. Personal services. Personal services. This is one you got to watch for as well. Up 2.2%. But also, that's not bad. Financial services up 1%. This is actually the start of a not horrible change in inflation. This reiterates the September-October thesis. I like this. If rents and personal services stay low and then you get lodging away from home that goes down and some of these other items start going down again, it's going to be good. I wonder how the market's reacting to this. Let's find out here. Hold on one second here. Let's jump into Webull. Let's just go to, I don't know if Webull's going to show me SPY future. Let's see here. SPY extended. Yeah, look at that. Nice move up in the S&P. Very nice. Oops. There we go. All right. What else do we have? Tesla. Yeah. Things are rallying on that CPI. Well, slightly. Excuse me. So that's very, very good. I'm happy for that. I do want to see exactly what's doing well here. Shift Technologies. Oh, they were up like 10% in after hours yesterday. Earnings were great. I'll talk more about those later, though. Yeah, ChargePoint. Let's see if the chargers are moving on this. Let's see. Slightly. Barely, though. What about like the mega caps, like Apple? Apple, nice sort of move here. But I mean, we're talking about pennies, right? 75 cents there on Apple. But clearly the market's happy about this. So this is good. I do want to see quickly the 10-year Treasury. Let's see. Okay, 10-year Treasury yield. Is crypto jumping? Crypto, that is so weird. That okay, well, look at that. Oh, that's also interesting. So the 10-year Treasury moved up 1.35 now. I want to see the day chart to see if it was just a recent reaction. Okay, whatever. Come on, CNBC. All right, whatever. CNBC doesn't want to load. It's on 1.35, so it's slightly increasing here. BTC USD. Let's see how it's reacting. 46,000 on the 1 minute chart. Yeah, we got a bump there on the 1 minute. It did came in as expected. It's actually not that high. So there we go. So I'm a little surprised. I would actually kind of expect this, given that this is sort of the beginning of an inflection point, potentially downwards. I would expect a little bit more softness rather than a jump in crypto, but crypto always surprises me. But then again, we expected crypto prices to peak around April 12th and May, what was it, 13th or something like that, and it did at some of the high figures and started selling down. So we'll see how crypto ends up reacting over the longer term here to some of these numbers not coming in as bad as expected. Headline numbers obviously still look pretty scary, but those will go down in September and October readings. So, gosh, I feel like I've been saying that for like 5 months. Well, I have been, but this is good. This is actually good news. This is a good read. I was really worried it was just going to miss horribly. I know a lot of people don't trust the CPI, but this is exactly the inflection point we want to see. Okay, I'm going to pass out, so I got to go. I want to be here for market open, but it just ain't going to happen. I'm falling apart. So thank you, everyone. I hope I get better soon. I appreciate y'all. Bye.